University students. Welcome everyone to the Q&A with interview with the Nasi of the Moneymaker Tribe, stock analyst wizard, live from Petach Tikva, Israel, Avi Lev. Woo. My name is Zach Greenberg, and I'm here with YUSC VP Ellie Taki. Avi, we're huge fans of yours, and so excited to have you. So to start off, can you tell us a little bit about your background, where you're from, and a little bit about your professional life and what you do outside of YouTube, if anything?
So now I'm going to switch to Hebrew. So whoever doesn't understand Hebrew, it's chaval. No, just kidding. Um, so I thought about what you said about the Moneymaker tribe, the Nasi. So there's the 12 tribes of the Israelites, right? So I thought the Moneymaker tribe would maybe be the new tribe, the next tribe. But okay. So Avi or Avram, which was my real name. I'm 34 years old. I was actually born in the U.S. In Salem, Massachusetts. My mother grew up religious. She came from a religious family. My grandfather was an Orthodox rabbi, and they split up. My grandparents and my mother went a more conservative path, and my uncle went Orthodox. So I have an uncle that lives in Brooklyn, Orthodox Jew, big time lawyer though. They live in Brooklyn, so I have many Orthodox cousins. And we lived in the US until I was 9 years old. And my father is Israeli. So when I was 9, we moved from the US. We lived in a few places in Salem and New Jersey, Michigan, and New Jersey again. He was in the hotel business, so we moved around. And then we decided he needed to come back to Israel, so we came back. And I grew up in a town called Arad. It's right near the Dead Sea. It's the closest town to the Dead Sea, about half an hour from the Dead Sea. My father worked in the hotel business, so he was working there. And I grew up in a town of 30,000 people, small town. And now I live in Petach Tikva. And my background basically was from the stock market point of view. So I have been investing the past 7 or 8 years. As soon as I finished university, in Israel, you have to do 3 years army. I was in the Israeli Air Force. And then I did 4 years engineering, software engineering, communication system engineering, and I started working at a high-tech company for software engineering. And so basically when I started working, I had some money, and so I started investing, right? Until then, you guys know you're in Yeshiva University now. If you don't have money basically to invest that much yet. So I was in Israel, the university is pretty cheap. You have colleges, Michlala it's called, which is more expensive. Around 30,000 shekels a year is a Michlala, so it's around $10,000 a year for the Michlala, and the university is around 12,000, which is about $4,000 for the whole year to go to university. So in Israel, it's a really great deal. I know yeshiva is a lot more expensive than that. I know I went to Solomon Schechter day school, so I know that gets expensive. So in the first pandemic lockdown here in Israel, I said to myself, maybe I'll try something else. I'm kind of, sick of being a software engineer a little bit. And I saw that there was a big movement to YouTube. So I said, maybe I'll try to make a video. So I made a video, and I started making a video. I have now 3 small boys, and then I had 2, and my wife was pregnant, and then we had the third, and it just got put back in under the table. And we had the second lockdown, which is a few months later. I said, I got to try this. And I was able to finish the video. And I held on to it for a while. I didn't really know it was terrible video, right? The first time you make a video, it's going to be terrible. And I didn't really know what I was doing. I was doing a voiceover and I was sounding like really asleep. It wasn't the best, right? And I said, I don't know, should I put it out? Shouldn't I? I ended up putting it out. This was at the end of middle November, end of November. Um, and I said, you know what? Let's do a few more. I started doing a few more. It took me like a few weeks to understand what I needed, what was the niche, where was I going, and I was still working full-time job. So I don't know if it was a plus or a minus, but because I was working from home, I didn't really have a supervisor looking at me all day, so I could do other stuff. And I ended up doing like 3 videos a day, and I was, doing my day job, and then like taking breaks, recording and editing until like 3 o'clock in the morning, and waking up a few hours, having a baby, not sleeping at all. And then I said to my wife, I don't know, maybe I should take a vacation, a leave vacation, take a furlough, something like that, and see the YouTube out and try to go 100%. And I saw also that it was better to put videos out later in the day because the time difference, right? If I put 7 hours difference, so if I put out a video early in the day, not a lot of people are going to watch it. So I said, okay, maybe I'll take a vacation. Then suddenly, I don't know if it's good or bad, but the company decided to outsource my whole department and basically let all of us go. So I was happy because I was like, yay, I get 6 months unemployment. I don't have to quit. And they said, we're going to give you another 20,000 bonus shekels bonus, and so you can land on your feet. And I was like happy. I was like, okay, I don't have to quit. I don't have to take furlough. I don't have to, I'm just going to write it out. And my boss said to me, listen, Avi, do this for until April, right? You have 6 months now. It's usually 3 months because of COVID. It became 6 months. So you have 6 months. Try this out for 3-4 months. If you don't hit your goals, right? You don't hit 15,000 subscribers, I think we talked about. Then start looking for a new job. So I started out, and in January I hit monetization, which means you get 1,000 subscribers and 4,000 hours of watch time. And it was going good. And then suddenly the whole Wall Street bets thing happened, and channel just started blowing up. And suddenly I had like 15,000 subscribers in February, and I was like, amazing. This is great. I'm gonna have 100,000 subscribers soon. And I saw Trey. I know you had Trey on a few weeks ago, last week, or a week and a half ago. And I was talking with him a bit, and then suddenly he blew up. And it was great for him because he could go 7 hours, 8 hours, make these lives, make these. He's very personal. His personality is great too. But I couldn't do that. I have the kids, and we were in lockdown, and the time differences. So I was happy with what I had, but and on the flip side, on YouTube, it's kind of hard. I'm just riffing here a little bit, but it gets hard to see other people's success and you succeeding less. Like, it's also in life, it's also in trading, and it's also in the stock market. You're going to see the other person or on Instagram or Facebook or YouTube, and they're doing amazing, they're making amazing gains, and you're going to say to yourself, why am I not making these amazing gains? Why is my channel not blowing up, right? But on the flip side, there's going to be someone else that is stuck or they're losing money, and you have to look at it in a perspective that there's always going to be somebody that's doing better than you. You have to stay your path, have your rules. Know what you're doing, and the psychological part of trading and YouTube in a whole can get very addictive, right? You can see the numbers going up. You can see the views going up. You can see the stocks going up. And this happened in February and March. People were very euphoric, right? And then everything crashed down. And then suddenly people were like, "Oh my God, what happened? Everything was going up. I thought this is the way." If you've seen The Mandalorian, this is the way, right? So this is what people thought, and crashed down. Now the same thing is happening now in crypto. We're seeing also really hot Dogecoin and SafeMoon and all these other coins, Ethereum, that are going up and up and up, and a lot of people are making money. And we're going to get to a point where it's gonna drop down, and so there's going to be a lot of people that lose money. But that's basically the story of the past 4 or 5 months. So now I'm 100% YouTuber. Um, and I don't know if I'm finished with software engineering, but for now I am, and I switched my life totally upside down. So I'm up all night, and then I sleep during the day, and my kids are in preschool now. So it came out great. The only thing is I'm up all night, right? So, but that's basically what's happened over the past 4 months. Um, and yeah, let's have some questions now, I think, a little bit, right, Zachary?
Yeah, that was a lot. You covered a lot there. That was great.
Yeah.
Ellie, you want to take it off? Take it away?
Yeah. Speaking of the time difference that you're in Israel, which is 7 hours ahead, how do you manage that with the stock market and everything?
So that's one of the problems that I have. It's a big problem. Why? Stock market starts here. I had it before, right? Even when I was working a full-time job, it starts at 4:30 p.m. So I might be at work or at home. Right now I'm at home, but when I was at work, um, it was 4:30. 4:30, a lot of things are happening at the job, and you can't really do a lot. Then I would get home, and I'd have dinner with the kids, and you have to put the kids to sleep, and suddenly it's 9, 10 o'clock, and you have only 1 hour of trading left. In the US, on the flip side, trading is basically for the whole workday. So that's a problem on the flip side. For me, it's a problem because of my kids. So if I try, let's say, to do some kind of day trading, or I need to be looking at the graphs all the time, it's really, really hard for me, and I really can't do it. I tried, and I just kind of lose money because I can't stay focused. You know, they're screaming in the house, or the kids want, "Why are you on the computer? What are you doing?" So that's been a difficulty for me. But from a long-term investor point of view, it's not that bad. But if you need to be Ben Weiss says that's why you don't have kids. You guys are young. I'm guessing between 18 and 22, 23, right? Yeah.
Yeah.
So you're still not in that phase of your life. But I only got married when I was 27, right? So you guys have a long time, and by the look of you, you're not going to be married. You're not even now. My cousins that are Orthodox Jews aren't getting married at 18, 19, so you guys still have time. But so I'm married.
There are two people in this call right now that are married, actually.
Really?
Yeah.
Married is okay. I get why you get married. I told my wife the only reason for me to get married, but that's like would be if we want to have kids, because we're both secular Jews, and that's not really, really important to us. So as soon as we decided, we both finished university, we had jobs, we were like, okay, it's time to have kids. Let's get married. And also, she's Moroccan, and she told me, if you don't ask me to marry you, I'm breaking up with you. So that's why we got married.
Avi, my next question is, what are some key indicators you look for in a stock, and what type of trading style do you generally go for?
Right. So on the YouTube channel, I had talked about initially a lot about penny stocks and growth stocks, but that's a small percentage of my portfolio. But that's basically what sells on YouTube. If you talk about, I have in my portfolio a stock ZIM. It's called ZIM. It's an Israeli shipping company, right? It's not sexy at all. It's kind of boring, right? It's not some new technology, but I'm up 100% in the past 2 months on it. So you're going to have some stocks that are less sexy and are more long term. My philosophy is really based in the what my father taught me. My father is around 30 years in the stock market, and he's seen all kinds of crashes, and from 1987 to 2001 to 2008 to 2020 now, and he gave me a few guidelines. And basically, the guidelines were um, don't try to catch a falling knife, which is what a lot of people like to do, right? That was one of the first things he taught me. Then he said, and this is something that I don't do anymore, and he doesn't do it anymore. He told me, don't buy any stocks under $1 billion, which are basically penny stocks, when I started out. And I didn't listen to him, and I didn't know what I was doing. And I jumped into a penny stock, and it was going up 100%, I think, and I lost a significant amount of money for me then. I think it was like 11,000 shekels, so it's around $3,000 more or less in like a day. And it was like I was in shock. I didn't know what happened. I was like, okay, maybe this is not for me. This is in the beginning. I said maybe he was right. So basically, that was the rule number two. And he told me, listen, I like stocks that are on the up and up, right? So if you see a stock that has momentum, that's in technology that you like, that has good quarters of earning, that is profitable, and that you see that there's conversation about, right? Don't buy a stock that nobody's talking about and nobody wants to buy, right? You have to look also at volume, because at the end of the day, one of the reasons why I don't trade on the Israeli stock market, which would be also I could trade on the Israeli stock market, is there's not a lot of volume in the Israeli stock market, and sometimes people get stuck with stock that they can't sell, right? They're stuck with stock, they can't sell it, and they don't know what to do, and then if somebody just bids, tries to buy it at a lower price, and you just do market, then you could lose a lot of money just because you were trying to get rid of that stock. So liquidity is a very important part of that as well. And I like to mix it up. I like not all your eggs in the same basket, right? So I'll have a shipping company. I like you'll have a Tesla, you'll have Apple, which are big companies, but I know. But you need you need like an anchor for your portfolio, and you need some big stocks to anchor your big portfolio, right? So a lot of people have been saying lately, listen, for your big part of your portfolio, maybe it would just be better to buy an S&P 500 index fund, and that will be your main part of your portfolio. Let's say 60-70%, and then the rest of the 30% you go for high growth, maybe penny stocks, and you try to find things that would give you those quick returns, but they give you also a lot of sakana.
Danger.
Danger, yes, a lot of danger. Good thing that you guys are here. Sometimes I do the videos and I forget words, and then I get stuck. So yeah, so there's when you have high potential for profit, you're going to have a lot of danger. So that's why I like diversification, and also this is important. It's not only for stocks; it's in life in general. If you can, right, you have enough money, don't put all your savings, I know you guys are younger now, but when you get a little bit older, you have a little bit more money, not to put all your money in the stock market, because the stock market can go up, but you will need some anchors. So it could be real estate, it could be a business, it could be, I know some people do like peer-to-peer lending. There's a lot of things and a lot of ways that you can invest. But going like 100% of all your savings in the stock market, especially if you're going high risk, is too risky, right? When you're younger, it's okay, right? Because let's say you have only $10,000 or $5,000. If you lose this money when you're 20, it's fine. You'll live another day and you'll be okay. But if you're 30, 40 years old and suddenly you have 100,000, 200,000, 500,000, and suddenly we have what happens in March, and this is all of your money and you need it for your mortgage payments, let's say you want it for your mortgage payments, suddenly the stocks go down 50%, then you're in a problem. I have my public portfolio went from $250,000 to, I think now it's around 170, right? It went down significantly in just the past 2 months, and it could be in 2 months when we're talking. It again, if we look again, it will be 300,000. We don't know what's going to happen. Sometimes in the you hit a stock, it goes up 400, 500%, and sometimes you're going to have this where it goes down 50%. So you can't be 100% in the stock market. That's just my opinion. I was seeing in the Discord, this was in March, a lot of people were saying to me, Avi, I'm going in 100% penny stocks. And I'm going to double my money and then I'll be able to pay my mortgage payments. I was like, no, please don't do this. And it happened. And then I don't know. I don't know if they lost the money. They probably left the server because they didn't have the money to pay. But that was the situation. And so just like the 17 people that are here, please, take that to heart. I know you guys are still young, you can still recover, but these rules will help you out when you're older. When you have the money, you need to practice, you need to get yourself used to a certain style of money and trading, and then when you have a lot of money, you're not going to put yourself in big danger. So that's that.
Thank you. Next question is, what are your top 5 favorite stocks that you own and why, besides AMC? Because we're going to be asking a few questions about that.
Yeah. I'll take a sip of water. Holy water. Petach Tikva water. Have you guys been to Israel? Probably. Big percent.
It was a beautiful place. That's a beautiful location.
Yeah. So my favorite stock of all time, actually, I have, it's not in the public portfolio, but I have, and my father owns a significant amount. So I guess I own as well of Tesla. It's made an amazing run.
It's the best stock ever.
It's amazing. He got in when it was 80, and he sold half of his position when it hit 200. So he was up almost 3x, right? Yeah, 80 times 3 is 240. So he's almost up 3x, and he sold half of his position. But it's gone up so significant that it's okay. But you have to look back and say, wow, if I wouldn't have sold, what would have happened? So this is just in the past year or so, right? And people are forgetting it. It's kind of like falling off the radar a little bit because there's other stuff, AMC and crypto are getting hot, and nobody's really talking about Tesla. To make a video about Tesla, I get like 500 views. Nobody's watching. So that's one of my favorite stock. Another stock that I really like, and it's made a great return, but these are big stocks, is Apple. I've had Apple also for a while, since it was 100. So before the split.
Would you say to get into these stocks now? Like what 5 stocks would you say to go into right now, like that you're holding?
Okay, it's kind of a hard question because it's a great question. When I was in university, they said whenever you have a hard time answering a question, say that's an excellent question. why is it an excellent question? Because we really don't know what's going to happen going forward, right? It could be that the stock market now is going to consolidate for the next year, basically, the S&P 500. We don't know what the effects of the pumping the stock market with money, with trillions of dollars, with pumping trillions of dollars into the economy. We don't know what's going to happen with that. So to tell you for 100% sure that these 5 stocks are going to go up is something that I won't do. But I'll tell you what stocks I like right now.
Yeah.
Because I'm not a prophet, like I say, even though I live in the land of the prophets. So AMC, of course, right? AMC to the moon. I think even now at the price that it is at, it has potential to get to 20. Now, 100%. Now, I know that the AMC community is saying that this is too low and it's going to hit 10,000. And what are you saying, Avi? It's only 20. I'm saying that I see 100% gain is a very, very good gain, right, to 20. If it goes more than that, I'm very, very happy. But this stock was at 20 just a few years ago, and they have a lot more cash than they had before. I just listened to the earnings call. They have $2 billion in cash. The company is worth $4 billion, and they have $2 billion in cash. So that's just a huge amount, right? And we're going to reopen. We're going to recover. So that's the recovery play that I'm in. We have the airlines and we have the cruises that are recovery plays as well. A lot of the airlines have already recovered. You've seen a lot of the airline stocks get back to their pre-pandemic prices, but the movie theaters and the cruise lines have not, and the hotel chains have not. So that's something very interesting just to take a look at, that those could come back. It could take a little more time. If you're looking for a recovery play, movie theaters, airlines, no, because they've mostly recovered already. So that's that. Second one that I really like and I talked about is ZIM. ZIM. It's a really good old company since 1948. It's not sexy at all. It's not sexy at all, but we need to have a little bit diversification in our best 5 stocks here. And it's a company that's not going to go anywhere. It's going to continue. It was at 120 before it went private. So it still has, it's at 40 now. It has potential to get back to that price. And shipping is going to open up even more. They're going to be making more and more profits. So that's a stock that I really like, and it's not on almost anybody's radar. Only mine, basically, on the YouTube ecosystem. Another one that I really like, that I really, really, really like is a company that is in the, what's it? Let me, 1 second. I don't want to recommend any of the penny stocks, by the way, just because I know that the penny stocks could have huge returns, but with the penny stocks, it's a gamble, right? You could get into SNDL or CTRM or the ones that I talk about, and suddenly they can go up 100%, but they could go down 50%. ZIM is not going to be going down. It could go down, but it's not going to be going down 50% in the foreseeable future, right? So if you're looking for quick profits, then that's the penny stocks. But with, like I said before, with quick profits comes high risk. So I'm not going to. I don't feel that that would be like the top 5 stocks to buy. I wouldn't go there. 1 second. Ooh. Sorry.
Why do you think ZIM is going to go up also?
So basically, when they IPO'd, they used to be a public company, and they went private. And when they went private, their price was 65, right? And currently their price is 39. So when they IPO'd at 11. It was way less than the price when they went private. And they had a high in 2013 of 113. And they're still the same amount of shares, same amount of everything. They IPO'd in like one of the worst times because they IPO'd at the end of 2020, right? And sorry, at the 29th of January, they IPO'd when the craze was Wall Street Bets, GME, AMC. Nobody was paying attention to them, and there was almost no interest in the stock. And I got in when it was 20, so I already missed 100% of the gain. But it's when the market is going down, you're gonna see it's green, right? And they have huge earnings. They earn a lot, right? The next one I want to recommend, and it's super expensive though. I hope they do a split. Is I know I'm like talking about the huge stocks, but Amazon. Amazon is a juggernaut. It's a huge, right? And they've not even hit the surface of their potential, right? Because in Europe and in Asia, they're not at the level that they are in the U.S., right? In the U.S., you have the one-day shipping and you have the drones and you have all that, right? In Europe and in Asia, that's not the case. So if I know in China they have their own websites, so China is kind of like off the table, but the other countries, Japan, South Korea, and all those other places have huge potential for them to move in there, and they're making like crazy amounts of money. Like if they wanted, they could buy AMC straight out today. Right? Yeah, China has Alibaba. They have also Pinduoduo, which is PDD, is the ticker symbol, which has also made a really nice run. A lot of people are afraid of the Chinese stocks. I own two, NIO and Baba, but a lot of people are afraid because of the whole regulatory things with China. But I know that at least for NIO, their accountant is PricewaterhouseCoopers, where my uncle works. So I know that everything there is above board. It's one of the biggest, or I think it is the biggest accounting firm in the world. So if NIO is working with them, I'm okay with that. But other smaller Chinese companies, I would maybe stay away from because we don't know what's going on. The big dogs are, I believe, if they use American accounting firms, are going to be above board. But I would double check who's their accounting firms, who's taking who's control of them, right? Before we get into any Chinese stocks. It's a little bit of FUD, right? Fear. What's FUD? Fear and I don't remember what the acronym means, but yeah, fear and doubt. But it's a little bit overblown that they would delist these stocks, and even if they do, you're not going to lose your money. You're going to get some money, but the stocks could fall down until it's going to happen. But it probably won't go to zero if that happens. But still, there's some fear there. Another stock that I recently the problem is it's not a problem, but why am I a little bit on the fence with some stocks the past few months is because let's say you have a stock like UPS that I've talked about on the channel lately. It's gone in an amazing run and they're making a lot of money currently. But in 6 months or a year, it could be that these numbers will go down and then the stock will go down. So sometimes you're going to have a stock that has a really nice run for a few months, 6 months, a year, and then the climate will change and they'll go down. Apple, Amazon, Google, Facebook, Microsoft, the big five, it's probably not a lot is going to change with them, right? People will still be on Instagram. People will still be watching YouTube. I saw a crazy stat that YouTube made the same revenue as Netflix. So Netflix has 200 million subscribers, and YouTube has the same amount of money, but Netflix has to produce their shows, and YouTube doesn't produce anything. It's all content creators. So, like, even if they make less money, they're still going to make huge amount of money. So, like, the five big ones are always going to be there, at least for the next 10 years, right? They're not going to go away. Um, so that's something like, even if I say, okay, UPS, I really like it for the next 6 months, a year, I don't know what's going to happen with the climate of the world in the next year. So it's kind of hot now. Like we had Zoom, right? We're doing the call on Zoom, right? Zoom was really, really hot. And then when people started thinking about, well, okay, the world's going to reopen, right? Why would we need Zoom anymore, right? We're gonna have meetings and we're gonna see each other. And like what I was working, we had Microsoft Teams and we have Slack. So there's a lot of other programs that we could use. Why would we use Zoom? So that's like a company that if you would say 6 months ago, a year, I would recommend it, right? But now it's kind of not there. The thing is to try to figure out what's going to happen in the next 6 months and try to find the stock that's not there. A sector that is really, really cheap now, and I think has a huge potential like 5-10 years down the line, is the whole genome sector. So you have like Kathy Wood has her ARC genome. So you can just invest in that. It's gone down significantly. ARCG, yeah. It's down, I think, 50% or something like that. Let me just take a look. And it's down significantly, right? But if this, it was at 115 and now it's at 78. And there's companies like PacBio and CRISPR, and we have BNGO BioNano, which is one that was talked about a lot, but now is a little bit in a downtrend because people are looking more after the stock market fell. Well, it's actually not the stock market. It's the growth stocks and the penny stocks fell. The stock market the indexes are at all-time high, which is a really funny situation. A lot of, like, I think 90% of people's portfolios are down, but the stock market keeps going up. So it's a very interesting situation that's happened in the past 2 months. Whoever has like an index fund it's looking great, right? But whoever's trying to buy individual stocks could be either down or back to the same place they were. Like I'm back to the same place I was in November, right? So from November to February, I went up like $70,000 or $80,000, and then in 2 months it pulled back, right? So you don't know, and sometimes you have to look at your portfolio. I just talked to my father today, and he said to me, I'm down like crazy amount of money. And I said, because he has a lot of Tesla, remember, because Tesla went up so much. So if Tesla goes down, so it was at 900, now it's at 600 and something, it's a 30% drop. It's a lot of money for him. So he says, I'm down a lot. I said, Dad, but you have to look at it at a macro, like zoom out, right? If you look from the beginning of the year, you're up, right? For 6 months ago, you're up significantly. Yeah, but and he's supposed to be the wise one, right? I think you get to an age where there's a trade-off suddenly. So I said to him, listen, you have to look at a macro perspective, not the micro. And he said, yeah, I know. But when you get to a specific, when you get to a certain range in your portfolio, it hurts a lot more, right? So that's interesting situation. Now the goal now is to one that I also like and is down significantly as well is Palantir, PLTR. It's another one that has huge potential for like 4 or 5 years down the line. They haven't even really hit the retail market yet. They were a company that were just in the government contracts, and now they're getting into more retail investors. They have to do a lot with AI and big data, basically, more or less. It's more complicated than that. I don't really know what their algorithm does, even though I came from a company that was in communication systems. But it has nothing to do with what they do. They do more like optimization of things and try to find like a needle in the haystack and all kinds of things like that. But that's a company that has also. I wanted to get it at 15, and it went up to 30, and I was like, oh no, I missed out, and it's almost at 15 again, right? It's at 20 now, so it's dipping again. It could be an opportunity to get in, and this is again a stock that's for 4 or 5 years or even 10 years that could be one of the biggest companies in the world if they can get their product in all the retail companies, right? I think going forward, a lot of companies are going to try to be um, as efficient as they can, right? I came from the corporate world, let's say, from a high tech company, and the companies are trying to remove dead weight from their books, especially now after the pandemic, where they know that things can change in an instance. Like my company was okay, but a lot of companies weren't. And they're starting to prepare how I can optimize my employees, how can I optimize the work, how can I optimize everything. And I think that Palantir's product will really help them once they understand that that's what they need. They need their product. So that's one that I really like. I don't have any because I was waiting to get back to 15. Will it happen? I don't know. But that's just the price that I wanted to buy a few months ago. So if it gets back there, I would get in.
All right,
I think
that was a lot.
that was a lot of stocks, not five,
Yeah.
but
More than
So this will be my last. This will be the last question before we take guest questions. So for the past few months, you've been heavily invested with the stock ticker AMC. So what led you to see that as a play? And do you think an AMC squeeze is possible? And if so, do you have like a time frame for like when it might occur?
excellent question. So when the GME squeeze started, I was looking at GME the first day, and I was like, "Wow, what's going on?" I know GameStop, I know this company, but what's going on? This is like before it wasn't in the news, anything. Um, we were in lockdown in Israel, and I was, making the YouTube videos, and uh, I saw that suddenly there was a huge influx of views on GameStop and AMC, and there was Nokia and BlackBerry and a few of those. And I said to myself, okay, Nokia, it's really the younger generation doesn't know what Nokia is. It's not gonna fly. BlackBerry, the same thing. That's not gonna happen. GameStop, people know what's going on. People know GameStop. They've been to a GameStop. They've seen it at the mall. The younger generation knows GameStop. AMC as well. They know the movie theater. They've been to the movie theater. I think that a lot of people will connect with these stocks. So I ended up buying a option on GME, but I was a little bit too late on it. So I lost the money on that, and I had money in my account, and I bought AMC at 14. It was high. It was on the way down. I thought it would pull back, and then it would go back up. At the time, we really didn't know what was going to happen. It was like nobody really knew what was going to happen. There weren't many people talking about it on YouTube, and whoever was talking about it really didn't understand what was going on. Like I saw this guy made a video about 4 or 5 minutes, and he didn't know what he was talking about. Really, he was just reading like an article or something. A young guy, and he got like 50,000 views on the video, right? So I said, okay, I need to a little bit understand more, and I'm going to open a position on AMC at 14. and it kept going down and down and down and down. I was like, okay, it got to 5, and I said, listen, 5 is way too low. I don't think it's gonna stay here, so I bought some more, and I kept growing my position. I saw that people were interested in AMC. It's not the stock that I love the most personally, but it's the stock that I feel that the nation loves the most, right? The tribe loves the most. And I try to talk about other stocks as well, even if they don't get a lot of views. But so I started learning about more about the stock, and the community and the servers um, were really really active. People doing like crazy due diligence, and a lot of stuff that I couldn't do myself. And it was interesting. It was an interesting time. Uh, then he started pulling back, and I was like, okay, I'm gonna do a covered call. And I think that messed a little bit up some of my subscribers because they thought that I sold AMC, but I sold a covered call, which is something else. And then suddenly it started going up, and it ran all the way up to 14. Right. So, and I was buying on the way up again. I kept buying, I kept nibbling. I didn't in the beginning. I didn't open a big position. I opened for me for that portfolio. I think my first buy was around maybe 5,000. I didn't go really heavy for my portfolio. And so I said to myself, okay, I can start building out a position. All the time, I'm going to continue. So I bought 5, I bought it 7.5, I bought it 9, I bought it 12, I bought again today a little bit at 9. And I'm growing my position, and I want to get it. It's almost at 3,000. So I have a really nice position. It's not the biggest position. I know some people have 10,000 and even more. But I think that that's a good position to risk for the potential of at least going up 100%. Because I feel that even without squeeze potential, this stock should get to the 20 area. Without the squeeze, without the rules changes, without everything that a lot of YouTubers and me also talk about, I feel that it can get to the 20 area naturally, right? Um, the data that has been coming out about the amount of shorts and the now we know that there's 3 million individual shareholders for the stock. And I just listened to what the CEO said, and he said, listen, um, the shareholders are my boss, right? When you have a publicly traded company, the shareholders are the boss of the CEO. And before this, AMC was owned by a Chinese conglomerate, basically. I think they own like 80% of the shares. So he said, before I just talked to the guys in China, and that was it. But now I have 3 million bosses, right? And they're going to have a voice how to move the company forward in the right direction. And I think that, first of all, it's a lot of young people, right? And the young people are going to know what they need from the company going forward, what they want, what they like. The Chinese guys really don't know what the youth of the U.S., the youth of the world would really want. So I see that as a big plus. It's going to make a little bit of a mess, a balagan, just because there's a lot of voices. And he said he's going to, try to. He's tweeting and he's trying to figure out. I understood that his son is I think he's infiltrated a few of the discords, and he's seeing what's going on there. And he's getting the gist that we want the stock to squeeze. Now, can he get us there? We'll have to see. But it has a lot to do with the earnings. So now earnings weren't great, right? But he said on the earnings call that the next few months are going to be a lot better than the, of course, right? The movie theaters are opening up, but they're seeing a really high profitability on the concessions. And that's where the movie theaters make their money. They don't make money from the tickets. The ticket sales, they break even, right? And they make all their money from the popcorn and the Coca-Cola and the nachos or whatever the AMC is selling now, right? They make money from that. So they've seen an uptick in those parameters for this first quarter, and it's very interesting to see how long that's going to last. Will people, splurge at the movie theater now because they're getting back to normalization, or will they, it will be a few months and then it's going to die down a little bit. So my hypothesis is that what's going to start the really big move up is once we get some upgrades, right? Once we get a lot of good information coming out about AMC, and the analysts are going to give upgrades. Last time that there was an upgrade, we saw about a 20% run. It went, I think, from 8 to 14. Once the one analyst upgraded, and it almost went up 100% from that upgrade, right? So if we start getting upgrades, it's going to start moving the stock up, and I'd rather the stock go up over a few months, climb, then we'd have what happened with GME, where it did the spike and then it pulled back. And there's been a lot of talk, well, when is the right time to sell, right? When is it going to be? So people are saying, well, wait for the tip and sell 20% less. We don't know when the tip is going to happen. We don't know what day it's going to happen. We don't know if it's going to go up big, then have a 20% drop the next day, and then go up 100% the next day. We don't know. And that's some of the behavior you see sometimes with these stocks that are squeezing, right? We saw this. There's a stock, MVIS, that went up last week. Suddenly it went up 20%, 30%, 50%. And then it pulled back 30 or 40%. And then the next day it went up 20%. So you don't know when the tip is, so that's going to be a very interesting scenario if we finally get this squeeze that we're all hoping for. I have patience because I've come out and said that I'm leaving these shares to my children. So for me, if it takes 5 months, a year, 20 years, I'm okay with that. But of course, for the younger generation, it's a lot harder to wait 2, 3, 4 months for something to happen. And I understand that. I have a problem with that too. When I was just starting out, I had a few stocks. I had Facebook at 70 and NVIDIA at 60. So Facebook is now 300 and NVIDIA is 600, right? And I didn't have the patience. I held them for 2, 3 months and I said, it's not moving. I sold them, right? And then, so if I would have held them 3, 4, 5 years, I would have made really nice gains. But I didn't have the patience to hold. And sometimes that's one of the lessons you learn when you're a young investor. And I still do it today. It's not 100% yet. I think you need to be like 50 before you can do it. To actually hold a stock for 10, 15 years. It's really hard. It's really hard to do it. You get impatient. You see, suddenly you see Dogecoin going up 5,000%. And you say to yourself, well, why am I holding Microsoft? I can put all of it in Dogecoin and I'd make a lot of money. And then I'd be happy. I'd buy my Lamborghini, but it doesn't happen all the time that way. So we have to be careful with that. We don't know. There's a lot of rules that are changing that are going to really hurt the hedge funds, but we don't know how much and if they won't be ready for it. Could be that they're going to be ready for it. There's very, very smart people working at the hedge funds, very, very smart people. They pay them a lot of money to figure out what to do. And the AMC apes are very smart as well. And it's going to be a real battle to see how they can deal with these rule changes that are trying to stop these millions and millions of synthetic shares being traded. They're not real shares that are out there, and they're pulling the stock down when it should be a lot higher, right? And last but not least on that, popcorn is the key and volume is the key. So we need people to be eating a lot of popcorn and Coca-Cola because that will bring the profits up. And volume is super, super low. If you take a look, it's around 20 million when 2 or 3 months ago, it was around 100 million, 150 million, even higher. And this is because the retail investors are losing interest, right? and the institution are also losing interest. We need to get the institution back, and we need to get the retail investor back. And first, it's going to be the institution, then the retail investor. Retail investor will come in after they see 50% gain, something like that. That's when the FOMO will kick in. They'll say, "Oh, I don't want to miss out on AMC if it's going to squeeze," and that's when they're going to jump in. So those are the scenarios that we need to happen. It's going to be very interesting to see how, if it pans out and how it pans out. I don't know how it's going to pan out. I don't know when. But it's all key of how the company is able to get back to its glory days. So.
And Hirabi Aminu. Hopefully soon. Avi, this was great. So now we're gonna we only have like a few minutes left. So if we could do a couple of rapid fire questions, like I know some
sure.
Audience have Yoni Stoll, student at Yeshiva. He'll go with the first rapid fire question.
I just want to say I'm a huge fan. I've been watching your videos for the past few months, and I wanted to respond to something you said. You said, don't put all your money into stocks, keep some savings on you. And I fully agree with that. But I think a lot of people my age are very scared of their savings just getting taxed away by inflation. And I was curious if you see this as an issue, and if you do, what's your hedge against it?
Yeah, thank you, Yoni, first of all, for your support. So I didn't say leave it in your savings account. No. Especially now when the interest rate is zero, no. But I'm saying that if you're going to, you're just starting out, right? Of course, if you only have $5,000, you can't buy an apartment, right? It's not going to happen. But it's better to have those $5,000 sitting in the S&P 500 index fund than sitting in the bank and doing nothing. And this is a problem that a lot of people have. It's not just the younger generation, but let's say when I was working with people were afraid that if it's not like in Israel, we have a Keren Ishtalmut, it's called, and you have your pension. It's like a 401k, the Keren Ishtalmut. People were okay with the 401k, let's say, the Keren Ishtalmut, to be in the stock market, but to open a brokerage account and put in their own money, they were afraid. They would rather close their mortgage, or which is like the best loan you can get. They would rather close the mortgage and have more stability, have less payments, than to invest. Which, if you think of it, it's kind of it should be the opposite direction. The loan from the mortgage is the best loan that you could probably get, or one of the best loans. And if you just put your money in the S&P 500 index fund, the past 90 years, you got 10% returns on average. And it's crazy. And with compound interest, it can become millions of dollars. Like that, those $5,000 accumulating over time, just putting in S&P 500 index fund, you can have like a huge amount of money once you retire. So I try not to leave almost any money in my savings account, basically. And a lot of time, I don't even have a lot of cash on hand in my portfolio either, which some people say is a good thing and some people say is a bad thing. That's up for a debate for another video, for another talk.
Thanks, Avi. The next question is coming from the Yeshiva University Stock Exchange Club President, Jake. Oh, you can unmute. Good.
Awesome. Thank you. Avi, thank you again for coming. I really appreciate it. I appreciate you coming to speak to our club. Speaking as somebody who, just from listening, has somewhat of a similar portfolio, a lot of tech stocks, a little bit in the genomic sector that we've seen, taking a pretty big hit over the last couple months. I know you mentioned, the value of having patience and holding these things out. But, there's also, as you mentioned, the other side, which is, do I cut my losses and invest into something else right now while everything else is sort of moving? So I was just thinking, in the next 6 months to a year, that sort of sector that's been taking a hit recently, is it worth cutting and reinvesting, or is that one of the things you'd say to hold sort of long term?
I tell you, it's one of the biggest problems that you're going to have, and one of the biggest things you're going to face. Okay, when the stock market dropped in March last year, 2020, a lot of people were saying, "Oh my God, sell everything and just sit on the sidelines." Okay, if you're going to sell and you have a secondary plan, meaning you have another stock that you like and you see that it's great potential as well, then move on, because it could happen that this stock will continue to go down or this sector will consolidate for a while. If you see a hot sector, something that's going great, then move maybe one stock, right? And not like your whole portfolio to something that's on the high growth, right? People asked me like in 2020, what do you like? I said, listen, it's gonna recover. It's gonna come back. I didn't know that it was gonna do like it did. I thought it would take a little longer, but what we can do, and this is an option, I don't know if you have it, is to sell covered calls. And that's an option that you can make money from holding the shares, even if there's consolidation. It's a little bit more advanced. It's from the option realm. It's the easiest thing to understand. You just Google covered calls. There's some great videos about it. And you need your broker to allow it. But basically, the worst case scenario is that you have to sell your shares at a specific price that you decide that's a good price for me to sell. So that's the worst case scenario. You could lose gains. Like if it goes to 80 and you put the strike price at 80 and it goes up to 100, you're going to lose that difference from 80 to 100. So that's something that you could do as well. Again, like I said with NVIDIA, like NVIDIA was not moving. And I saw some other stock that was moving. So I'll get out of NVIDIA. It went from 60 to 600, right? So it took a while, right? It took like 4 years, but eventually it got there. So you have to decide as well, is this a part of my portfolio that I'm more aggressive with, right? Or is it more of a long-term play? If it's more of a long-term play, then you could have some patience with it. But if you guys are young and you're trying to do like more aggressive plays, then maybe switch it out. Because I had like the stock that started the penny stock challenge that I was doing, that's now like ala panim. It's gone really bad, but I'm still up 3x on my initial investment, which is great. But I was up 10x. So I had SNDL as a penny stock. It was down 30%. I sold it and I got into BNGO, and BNGO went up to 120%. So you're going to have scenarios like that, but you don't know beforehand, right? And if you say, okay, I'm doing 30% here loss, and I'm moving on to something else that I see has a lot of potential, I'll get back into this stock. I'll keep it on my radar. I think it has a lot of potential for the future, but I don't think it's going to move a lot. And even if it moves up 10, 20, 30%, I'm okay with that loss that I had of 30%, and I'll get back in at the price that I feel that it's in a good momentum. Right, so that's basically your options.
Okay, wow, that's a great, yeah. Thank you, Avi. Our last question will be from.
I wish I had an investing club when I was in university. Maybe there was, and I didn't realize.
Mitch, you want to go?
All right. Hey, thank you so much for coming over here. Really appreciate it. Watch some of your videos. Really appreciate what you do. I'm the Chief Admin Officer at Stock Exchange, so it's great to ask a question to you. I'm wondering, in terms of, you spoke a little about China, and we know China's a communist regime, and they pretty much have a federal takeover of those local businesses. So when we look at Taiwan, they might jump into Taiwan. They're currently encroaching in Taiwan's area. And so I'm wondering about specifically TSM, Taiwan Semiconductor, because we know there's a big chip shortage. So I'm wondering, would you invest in Taiwan Semiconductor, considering the fact that, I mean, I feel like it's a real possibility China will take over Taiwan as they did with Hong Kong. And I'm wondering, is that something that worries you, or how do you mitigate that risk?
Yeah. Well, I think actually Taiwan, autonomy of China, meaning they have their own government, but I think they're still run by the Chinese government. If I'm not mistaken, it's that like in the Olympics, they're not called Taiwan, they're called something else because they can't be called Taiwan. It's I think the Republic of China, Taipei, or something like that. So they do have already a foothold in Taiwan, but the company, the TSM, it's a huge company, right? And it's seen a pullback. The products in the world are going to need the chips that they make going forward. 5G and the products that are going to Internet of Things. A lot of these things are going to need the chips that they specifically make. And they've gotten a hit with all the chip shortage. The stock has gone down a little bit, but they still have a potential. It's more of it's a heavy stock, right? It's not going to move a lot, but you could see a 30% return on it over a year, right? It's not going to be like huge gains, but because it's like it's heavy. We know what's going on there. They don't have a lot of. They do have growth, but they don't have like huge growth. Like there's not huge potential there to get like 100% return. It has taken a pullback, right? I was thinking about. I talked to this with the Discord members about it, like a month and a half ago, and all the analysts were giving it A+ ratings, and they were giving, and it was at the top. And then the news about the shortage came out and it pulled back, right? I still have good feelings about it. If I would put a position, it would be a big position because it's like Apple, it's like Tesla, it's a huge company, and the world needs what it's giving, right? The world is going to need their product, so it's not a company that's going to go away. The Chinese aspect of it, I'd have to see who's running it. Like I have to do a little bit of a deeper dig into what the company is. Who's their accountant, who's their CEO, what's going on there, and try to figure out, like you said, if there's going to be any Chinese government interference. But we've seen, even with Baba, that they got like a fine from the Chinese government, and there is some, things that are going on there. The stock still was able to go up a significant amount. So it's pulled back now from 300, but because of all kind of other things. But we've seen a lot of other Chinese companies really go up. So it's kind of, the Chinese companies are a really hard conundrum, right? You have to, it's like specific, and sometimes, like you said, the government takes control. And why I like NIO is because I heard that the government was backing them. And that was a plus in that specific scenario because they have initiatives to get the EV cars on the road. So I really like that because I thought there would be a lot of potential. And if the government was backing them, they would make sure that they would sell a lot of cars and make a lot of profits. That's why I liked it. But if the government is doing like shady things behind the doors and fake profits, and the company's not there and things like that, so then that's what you have to be careful of.
But if I could quickly respond to that, I think I have two things. First of all, I think when we talk about the way China, leverages their control over these countries, I mean, obviously there's a difference between the way they're treating Hong Kong, where they're utterly just destroying them. They're not treating them with any decent human rights. And then Taiwan, where they're currently starting to encroach in their airspace. So I think it's a little bit different in terms of that. But I think when you talk about scarcity, I've learned a lot about scarcity from these cryptocurrencies that exploded. It's all about how many coins are potentially mineable, and how scarce the product is. So when you say there's a chip shortage, I would imagine even after a short pullback, if there's a chip shortage and they are the biggest chip maker in the world, let's say, which it sounds like they are, wouldn't that be a plus? And when you said you were going heavy, I would probably agree with you on that one.
Yeah, so it's like a double-edged sword, because once there's a shortage, the companies that use the chips are gonna shut down the production, right? Because they're going to say, okay, if they're going to lower production, they're saying, okay, if I can't produce, right, I don't have enough chips, I can't create these products, there might be a lowering of production and less buying, right? So it makes sense what you're saying, that if there's a shortage, right, then these chips would be more expensive and then they would make more money. But on the flip side, if there's a shortage, it could be that the companies are saying, listen, I'm not going to get into a bidding war, because if I have to pay, instead of $2, I have to pay $3 for this chip, it's not worthwhile for me. My margin is not enough, and I'm not going to sell it. It's not worthwhile for me to produce when suddenly these chips are more expensive. I'll either go to someone that's selling it for less, or I'll just stop production and we'll produce less, fire employees, close down factories, and that's what we'll do. So that's something from economics that you have to think about. If the chips get more expensive, will it be worthwhile to create the products that use these chips? What the margin will be? Will the consumer buy suddenly, if I don't know, the iPhone is, instead of 800, it's 1,000? Will iPhone maybe, but let's say if it's like a shirt that's, I don't know, with Internet of Things, let's say in the future, if the shirt suddenly costs, instead of $30, it costs $60, could be that the consumer won't buy it, right? So that's something that's why I think that the stocks haven't gone up significantly, because they're already pretty expensive. And if they get more expensive, then it could be that it's not worthwhile to produce these products.
What's the next biggest competitor, would you say, to chip maker TSM?
I'm not really sure. In the specific realm, I'm not 100% sure the dynamics of their chips, because there's a lot of chip creators and there's different kind of chips. So I don't know what all of their business is. Do they do only there's NAND chips, which is like Micron, and then you have more advanced, which is like AMD, Intel, that do the circuit boards and those kinds of chips. And then you have Texas Instruments does all kinds of chips. So you have to know exactly. It's like a whole world. There's very small discrepancies. Now, what you could do is, there's an ETF for chip companies, right? And let's say you want to get in and see what are the biggest chip companies. You could just go in and see what are the companies that are held in these ETFs that are for chips. And probably you'll see the top 8 or top 9 companies in the world, and just check out, do a little bit of research. What we're selling, who are their competitors, because it's each there's a few kinds of chips. It's not all chips. Like the EVs take a certain chip. AMD and Intel do different chips. So it's kind of, you have to figure out which one is what. I'm not 100% sure in the technology that TSM operates. I didn't really get heavy into that.
Thank you.
I'm sorry about that.
That was good. Thank you.
Yeah. Okay. So, Avi, thank you so much. And on behalf of the YouTube University Stock Exchange Club and students, we really appreciate you coming to speak with us. And thank you for staying up late
I go to sleep now at like 5 o'clock in the morning. So it's only 2:46. I still have a little bit time. But I think I'm done with videos today. I did a live and all this, so I'm going to go relax.
Okay, enjoy. Have a great night, everyone.
Thank you guys for watching and supporting and coming and talking. I had fun.